Imagine this: you meet a business that doesn't talk in words, but in numbers. Instead of saying, "I'm doing well," it shows you a chart of increasing profits. Instead of saying, "I'm in trouble," it hands you a balance sheet with red flags. That's accounting. It's not just about keeping records. Accounting is the language of business, a tool to understand, communicate, and make decisions. In this video, we'll explore the evolving role of accounting from its earliest purpose to its modern-day significance. The role of accounting has evolved over centuries. In ancient times, it was used to record taxes, tributes, and trade. During the industrial era, it helped monitor factory costs and profits. And today, it goes beyond ledgers. It helps businesses plan budgets, make investments, meet legal obligations, and even report on sustainability. As economies and societies became more complex, accounting adapted to serve new needs. At its heart, accounting does three things: measures, it quantifies transactions, how much you earned, spent, or owe. Classifies and summaries, it organizes this information into categories like sales, expenses, assets. Reports, it presents the data in forms like income statements and balance sheets so that decisions can be made. In short, accounting turns complex financial activity into simple, usable insights. Just as we use languages like English or Hindi to communicate thoughts, businesses use accounting to communicate financial reality. Want to know if a business is growing? Look at its revenue chart. Curious about its debts? Check the liabilities section. Like any good language, accounting is structured, standardized, and universally understood by bankers, investors, analysts, and managers alike. Accounting also acts as a service provider. It delivers quantitative financial information to help different users, managers make internal decisions. Investors evaluate potential returns. Governments ensure tax compliance. Banks assess creditworthiness. Whether it's expansion, hiring, borrowing, or investing, accounting services every major business function. In the digital age, accounting has transformed into an information system, like a real-time dashboard that monitors business health. It collects data, processes it, and then communicates insights to various stakeholders. With tools like ERP software and cloud accounting, businesses can now track financial performance instantly, not just at year-end. This shift has made accounting dynamic, real-time, and decision-oriented. But accounting isn't perfect. It deals mainly with quantitative and financial data, what can be measured in money. It doesn't reflect qualitative factors like employee satisfaction, brand value, innovation potential. So while accounting tells us how much, it often doesn't explain the why behind success or failure. Think of accounting like a fitness tracker for businesses. It monitors income instead of calories, expenses instead of steps, and balance sheets instead of heart rate. It doesn't make the decisions for you, but it gives you the numbers you need to make smart ones. Let's summarize the key roles of accounting: language of business, universally understood way of financial communication. Historical record, a reliable archive of past transactions. Measurement tool quantifying economic performance. Information system delivering data to support real-time decisions. Service activity empowering stakeholders with financial insight. As economies grow and challenges evolve, accounting will continue to play a critical role in shaping business strategies, public policy, and investor confidence. It's not just a support function, it's the foundation of smart, strategic decision-making. In our next lesson, we'll break down the basic terms in accounting that make all of this possible.